We're going to go ahead and get started. So, welcome, my Life with Crypto brothers and sisters. Welcome to another Money Monday crypto training. I'm your host, Kelly Sunshall, and today we are diving into my top 5 crucial trading rules for long-term survival in the crypto markets. Now, these rules are born from a decade of personal experience. Hi, Karen. Karen says, Karen. Hi, it's Karen. Loud and clear. Oh, perfect. Loud and clear. Don't make it louder. It is loud. Hey, Jeff. Nice to have you here. Dale, Karen. So nice to have you all here. So these top 5 trading rules for long-term survival that I'm going to talk about today are born from a decade of personal experience. And these are the good, the bad, and the neutral. So let's dive into the lessons that history has taught me. Okay, the first rule, survival rule number 1, how much to spend. Now, I'm going to read this and then I'm going to talk about it a little bit. So don't go crazy with buying. Don't spend more than you can afford to lose. How many times have you all heard that? If you were here with me physically, I'd say raise your hand. Your investment needs to be significant enough to feel the impact, but not so much that it ruins your life if things go wrong. So, number 1 most important rule is never go all in for any trade, ever. Don't ever put everything you got into one trade because you know it's going to do well. You know it's going to go the right way. No matter what, don't put it all in. But then again, at the same time, if you want to make money in crypto, you will need to invest more than a trivial amount when a good opportunity shows itself. So it's a balance. And if you know the famous investor Charlie Munger, this is one of the things that he has written about in some of his tips is you won't be told to go all in. I don't want to use the word go all in. You won't be told to put a lot of money on a good play in any, curriculum at school. Because I just read this recently. You're never told to put in a large amount of money. But if you've got what you believe to be a good quality opportunity, don't be afraid to put some money on it. But make sure you've done your research. Make sure you've got a plan and make sure you're not just, jumping off half-cocked to make something happen. If you've got a plan, it looks like it's setting up right, don't be afraid to put some money on it. But whatever you do, don't put your savings in there if that's all the money you got in savings. Because if you're wrong, you don't want to lose everything. Okay, that is survival rule number 1. And this was so important for me because I started out putting very, very, very little money in. I started out with all of $250. And over the next few weeks, I put in another $250. And then a week or so after that, or 2, I put in another $250. $750 was not a lot of money. And it was a good place for me to start. But it wasn't until I kept learning and kept adding more money to specific trades that I actually started making some money. The $750 by itself would not have made me a millionaire. All right, survival rule number 2, 2 saviors. You cannot and will not survive trading over the long term without the 2 important tools of capital preservation, and they are stop loss and risk management. Now, those are big topics, so I'm going to save talking more about those in part 6 of this series. Briefly, I will say that for people who are doing trading as opposed to investing, you want to have a stop loss set. And what that does is if you set a trade to execute at a certain price and it goes against you, you want to have a stop loss that says it will trigger closing out that trade before it falls any further. That saves you from losing a bunch of money. And we'll talk more about what risk management means, like I said, in part 6. Now, I want to say a little bit about the difference between investing and trading. Karen, who's on the call with me today listening, she and I have had many conversations about what is the difference between an investor and a trader. Now, technically, if you're an investor, you're buying quality assets that you've researched and you're holding them. That's kind of by definition what an investor is. But when you invest in crypto, you go through the same motions that you do as a trader. You've got to decide when to get in. You've got to decide when to get out. Even if it's 3 years before you're going to get out, you still have to decide. And you use the same trading tools that a trader uses. You got to look at charts. You got to look at trend lines. You got to look at candles. You got to look at, support and resistance, all that stuff. You still have to pay attention to the same kinds of trading things, even if you're looking at being a long-term investor. And stop loss isn't necessarily something that will be important to long-term investors, but risk management very much is. All right, let's jump in and look at survival rule number 3. I love this one. Don't fight the trend. Follow the trend. Don't fight it. And use the weekly time frame and maybe the 50-day moving average to identify the trend, and then trade in the market's direction. Don't try to outsmart the market, because it seldom pays off. Well, I never think that I'm smart enough to outsmart the market, so it's very fun for me to identify what the trend is and just go with it. So probably many of you have recognized or have heard me talk about the fact that I think we're in a bull run right now, that we're at the early stages of a bull run. I truly believe that the institutional players are more involved right now. And once the retail players become involved, that the price is going to get pushed higher and higher. So that's the trend. So I'm not going to short things right now, even though I know for a fact that it's not going to go straight up in a straight line. We will have some pullbacks, and people that are better traders perhaps than I am will try to short those little opportunities where the market might fall, see if they can make some money there. I would never do that, and I wouldn't recommend doing it, because even good traders are going to have a hard time making money doing that. So go with the trend. And in a bear market, if the trend is going down, don't fight that. Don't try to make money with a trade that you want to go up. I personally prefer to make money yield farming during bear markets. Then I don't have to pay that much attention to which way the trade is going. All right, let's look at survival rule number 4. Exit at the first sign of bearishness. Don't pray for a trade to go your way. Don't hope and don't wait. Exit at the first sign of bearishness ASAP. Cut your losses and keep them small. The fastest way to make money is not let me rephrase that. The fastest way to make money is to not lose what you already have. Now, this sounds so simple, it seems, but I'll tell you, this is the one that I have the hardest time with. It's like if a trade starts going against me, it's hard to want to get out, because you think, oh, it's not gonna fall very far. Oh, it's gonna bounce back. We have a tendency as human beings to get married to a particular token. And you want to try to control those emotions and not do that. So that's why it helps to have a plan and to write things down, because then if this thing falls below a certain amount of money or a certain percentage it goes down, which is against what you want, okay, I need to get out. Now, this information that I'm sharing on this survival rule number 4 is really meant for traders. As a longer term investor, I have held tokens purposely through a bear market, which means prices are all down. I've purposely held them through a bear market, fully expecting them to recover back in the next bull run. Now that I know what I know, I don't recommend even to myself doing that into the future, because you never know if a token is going to do as well in the next bull run as it did in the last bull run. So it's better to just take all the profit that you can in the bull run that you're in. And then when you get towards the top of that bull run, sell those tokens off, get back into cash, USD, USDC, USDT, something like that, and then be prepared for the next opportunity. That's why you want to exit at the first sign of bearishness, because then you save yourself and you save your money so that you can play another day. All right, number 5. Survival rule number 5. You'll hear me talk about this all the time because it's so important. Have a plan. Don't trade if you don't have a planned entry and exit point. Just listening to the opinions of others will leave you guessing about whether your decision is the right decision, and that indecision will cost you money or cause you to miss opportunities. You must have a plan to succeed. And it's good to get advice. It's good to get education. It's good to listen to others to help you hone your own opinion. But it's absolutely critical for you to build your own self-confidence. And the way you do that, in my opinion, is by having a plan and executing it. And if it doesn't seem to go the way you want it, you learn from what you've done and you change your plan. Or you could decide you don't want to be this kind of a trader, you want to be that kind of a trader. And you figure that out by having a plan and seeing how it goes. Nothing wrong with it going the wrong way. You just decide, okay, I'm going to change my plan. So anyway, I hope that helps a little bit. And I've got, hey, Dave, thanks for joining us. I have one more bonus rule I'm going to throw out there, and that is keep learning. Now, I have been paying attention to Bitcoin since roughly 2011 or 12. That's when I first started trying to figure out what this Bitcoin stuff was. And it wasn't until 2015 that I finally decided to buy my first couple of Bitcoin. And I have not stopped studying or learning ever since I bought that first Bitcoin, because crypto changes. It changes. The blockchain technology itself is constantly changing, and the crypto applications that are built on top of it are constantly changing. So if you plan to play in the crypto world, you got to keep up with what's new and what's old. And the only way to do that is to find experts that you trust and listen, and if possible, read. It's perfectly fine to watch YouTube videos, but you got to be careful because a lot of people throw out information out there that may or may not be up to date. So you got to do your own due diligence. So you do that by continually learning. Now, I see somebody with a question here that says there's a difference between a down candle or two and a bear run. Yes. So a down candle is a candle. You got to learn a little bit about candles to know what I'm talking about. But a down candle is usually red. They open at the top of the box. They close at the bottom of the box. The more of those you have in a row, the more bearish that the current trend is. But again, if you want to know what the long-term trend is, whether it's bearish or not, you got to look at not the daily candles. You got to look at the weekly candles. I even look at the monthly candles. Because if you have a couple of down candles in a monthly time frame, those are going to tell you a lot more about the current trend, which I would say is very negative, than if you're looking at a daily candle, the daily time frame, and you've got just a couple of red candles. That isn't holding near as much weight as looking at a weekly or a monthly chart with red candles. So I hope that helps you a little bit, Dale, to understand. A bear market, really, it'll be pretty darn clear if you're in a bear market, it's more, to me, it's more obvious when we're in a bear market or a bear run, if you want to say, than when we're in a bull run. Bull runs build a little bit slower, but when the top is hit, the market tends to fall off a cliff really fast, and it makes it really obvious when the bull run is complete. So that was a little bit longer training today. As I mentioned, these rules that I've just shared with you today are born from my experience. So learn from my mistakes and hopefully my garnered wisdom. Scroll through the guides section of the Facebook group or the Money Monday playlist on my YouTube channel to learn more. Put in the effort to get educated and then jump into the pool, because we don't really learn until we get our hands dirty and do it. So I appreciate you all joining me today. That's all I have. But I would ask one more thing. Please like and share this video and help me spread the word about the future of finance and crypto. So as always, stay curious, keep learning, share your thoughts or questions in the comment sections, and I will always come back and answer. So see you all next week. Bye for now.